Ladies and gentlemen of the crypto space, we're live at 11:29 a.m. on Tuesday, February 2nd. Today is an absolutely critical day. There's more than anything that I think I've ever seen going on in the markets. The data is almost overwhelming. We have contradictions. We have correlation, inverse correlation, and I expect some serious contrarian action to occur. Um, Charts tell the data. We have our macro theories based on precedents, based on history. But in the end, the charts tell us what is going on. Is something going up? Is something going down? And who gives a shit if it's actually denominated in dollars? So, what's most pertinent is what the charts are doing right now and the story that is relevant for today, and how the story relevant today is considerate of history and fits into a longer time frame horizon. So, what is going on today is meaningful, plays into what's going on over a larger period of time as well. And that's what I want to dig into a bit today. We're going to talk about not chasing gains, put yourselves on the path, what is going to play out in the short term, the midterm, the long term. I don't give a crap if Doge is up 900%. I have no interest in assets like that. That's an absolute waste of time for me. Don't get me wrong. We saw on Twitter plenty of popular Twitter personalities cranking out five-figure, six-figure gains, playing the long game, playing leverage positions. It's just something that I don't have interest in. I have interest in, it's not just fundamentals. My perspective firmly is not just pride. There's something that it's like it reminds me of the feeling I get when I think of programming and the code that I've done over the past decade. Um, it's when you craft a piece of code and it's well done. It's structured well. It's architected well. There's a sense of poetry, a sense of accomplishment, a sense of success. But when you do something right, it means something. And that's the way I feel about a portfolio. A portfolio is a representation of your mentality, of your personality, of your thoughts and ideas. It's the culmination of your logical and analytical capacity. And that's some serious shit, boys and girls. Don't chase gains, put yourselves on the path. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Captain Weber's in the house. Team is prepared. Igor's in the house. Crypto Chick, always a pleasure. Craig's in the house. Cusco, what's up? Julian, yes. Eth looking strong. Yeah, I don't really look at the Eth chart much. Clearly, I have a nice position in Ethereum. Just saying, I don't look at it much. I don't, I know it's there's two macro assets in the crypto space, but I just feel that all I need to do is look at Bitcoin, and basically, clearly, you have the Bitcoin dominance consideration, where Bitcoin goes up and Ethereum goes down. But I just don't. Anyway, that's just what I have to say in that regard. But yeah, Ethereum is great. Come on, we talk about it all the time. So I don't mean anything in that regard to detract from the bullishness I have for Ethereum. Derek's in the house. What's up? Look at the macro narrative, everyone. Well, that's all that matters, guys. And it's you can look at a micro, um, something micro, meaning like a particular asset. But even looking at something like that, it fits into a big picture, and that's just means everything. Uh, Jaforka, Igor, at all-time high now. Lovely. Love that F. Keep on going, baby. You know why? Because you need the Ethereum to operate in the DeFi space. It's gas, it's fuel, it's everything. Can't operate on the platform without it. That's what it is. It's a platform. Probably the most incredible platform of uh, of of, uh, of functionality, opportunity, activity that I've ever seen. Nothing even remotely compares historically to what's going on. My first live, Mathis, my man. Hit likes, everyone. 18 people in the stream, 4 likes. Smacky, smacky that button. What are your thoughts on Ren News? Extraordinarily bullish. SBF operates a massive, massive exchange on the scale comparable to Binance, at least with regard to recognition. This might be one of the most bullish things I've ever seen for the Ren platform, other than functionality, of course, and understanding what it does and the what it provides to the crypto space. Um, Generally speaking, what this relationship offers them is a capacity to scale and expand to a degree that they would have eventually done by themselves, but this will ramp the pace of progress significantly. That's the deal. I'm on the path with Bitcoin, Ethereum, Ren, Rook, Cell, Dot. Man, those are some serious picks right there. So Bitcoin, Ethereum, no doubt. Ren, psh, we just talked, and we've talked a lot about it historically. And we'll get to Rook because I don't have any risk on plays. And at this point, is it even a risk on play? Fine, it is because of the macroeconomic landscape, and if we experience a risk off event. Because if you're looking at ES, you're looking at the futures markets, S&P, maybe even a QQQ. Yeah, there's some serious potential for a risk off event. But that's irrelevant, and that's exactly what I've been posting more frequently on Twitter. I'll hit that topic in a moment. Let's keep it ongoing with who's in the stream. Lewis, velocity. It's all about velocity. This is all about velocity. And as they expand M2, the monetary base, they're collapsing velocity because total circulating capital is the denominator. So velocity is crashing. And that means everything, because if you don't have velocity, if you don't have borrowing and lending, you're not going to have growth. You're not going to have monetary expansion. And it is what it is, and that is what is occurring. We're watching the not the it's worse than the downfall, and I hate using big words, inflammatory words, but we're watching the death of the legacy financial system, and that's not hyperbole. It's playing out right before our eyes, and politicians likely don't have a capacity to articulate what is indeed playing out, but fine, maybe in a couple of years this thing could turn around, but the destruction of monetary velocity, the destruction of business, the psychological impact of 2020 and the closing of the businesses, the fear is in the air, which means nobody is taking risks. Banks aren't taking risks. Banks aren't lending. And even worse, people aren't borrowing. They don't want to borrow. They don't trust. They have fear. They have doubt. And until that cycle turns around, that's the type of story change that I often talk about. Until that story changes, the trend continues, and the trend right now is on the complete and utter implosion of basically um, the American economy from a dollar standpoint. That's not really, I don't think that's debatable. I think that's just obvious and apparent to anyone that just looking at M2 velocity. That's it. And clearly there's other indicators, and clearly the fact that tech equities are basically probably sooner than later in a blow off top. If you look at Sven's charts, man, this thing is in the most ridiculous rising wedge anyone has ever seen. When this thing breaks down, it's going to be an extraordinary cascading effect. The deflation of the tech equities are going to be painful, and we in the crypto space, yeah, we could get excited, but and to be honest, we should feel bad because they don't teach financial literacy in institutions properly, and in the lower grades in public schools, and people are going to get absolutely destroyed. Can you imagine someone putting $100,000 into Tesla today? Come on, tech equities are just going to get annihilated inevitably. You don't fall from where it is slowly. And what happens is, here's the problem. The problem is, sure, everything rebounds, and if you look at the S&P or Nasdaq over the last bajillion years, it's straight up. So, but the problem is the general public lacking the financial literacy. Um, the second something starts tumbling, the emotions override all logic and reason, and positions are exited. Uh, and that obviously exacerbates the collapse and the ripple effect, and it spreads like a virus. That's the virality of the that this type of event that's pretty much inevitable at this point. And liquidation. So clearly, if you buy Tesla today, it'll probably inevitably be back at the price point it is today. It might take years, but if you were in Tesla back at like $280 a share pre-split, I don't know, and I wouldn't give a shit. I wouldn't give a shit if tech equities collapsed, because the purpose of tech equity or equities is you're owning a part of the company. And when the equities collapse, it has nothing to do with the companies. The stock market right now has nothing to do with the companies. I would do anything to own my original Tesla shares, and it's a complicated story. I don't want to digress too much, but if I had my Tesla shares at $280 a share and um, Nasdaq collapsed, I wouldn't do anything at all. I don't give a crap if it takes the 60% hit. Do you have any idea, 60% down from where it is? Do you have any idea how far you're up from the $280 price point at the beginning of last year? So, and the fact is, there's relief and satisfaction that you don't have to fear or worry, that you don't have to do some extraordinary action and try and protect value. And, I know traders will be like, you're going to lose all that value. Yeah, I don't care. It's not about that. This is about the long term. It's about positioning yourselves in assets that are going to outperform in the long term. And here's another problem, though, unfortunately, with tech equities. And it has to do with my macro thesis that once tech equities collapse, we're going to experience the great value reallocation. Commodity super cycle considered, commodities and basically not tech stocks are at like 90-year historic lows. And that inverse relationship in the market has been known for quite a while. And reducing markets to emotions and humanity, because humans are predictable. And at this point in time, it just seems extraordinarily obvious to me that when tech equities collapse, we're going to experience the great value reallocation, because the fear will be in the market, the fear of the previously inflated market. And is it ever going to get back to where it is? And the general public and retail will never participate in that market when this freaking thing rips 40% or 60% to the downside. So people will start reallocating to the currently uninflated assets, the shit that's off everyone's radar, the stuff that deserves the capital, the stuff that's going to be critical components in basically the 2020s, building out um, uh, the alternative energy market, the electric vehicle market, and risk off and gold and silver and value preservation and the yield starvation story and the necessity for yield and the search for yield. And there's so much shit going on. It's hard to put into a couple of sentences. So anyway, this was Lewis's comment that got me started on this rant with the velocity baby. So of those assets you mentioned, I also like Cell. So Cell has a huge amount of retail involvement. I don't have a position in Cell. Can't own everything I want to own. And that kind of turns me off. I don't like that retail involvement. I don't like the trades that are crowded. I like the stuff, or I want to place value where it isn't crowded. And frankly, I think stuff like Ren is extraordinarily undervalued, and especially with this SPF partnership, um, I feel comfortable starting to think in terms of dollar ranges. That whole rent to 10 type of narrative has been floating around on um, on the social media channels and Telegram for a while. I don't see 10 right away. And that's not even on my gut instinct radar. But at this point, we're sitting at like 60 something cents, 68 cents, 70 cents, 66 cents. So it went up to 70 cents, it dipped to 66 cents. If you're in at 6 cents, who gives a crap? So, but yeah, gut instinct says dollar ranges, 2 billion market cap, 3 billion market cap. Uniswap is $5 billion market. Come on, guys, come on. Anyway, so that's exciting. Very bullish on red. Stelios is in the house. Always a pleasure. Yeah, Crypto Check. He's got an awesome portfolio at this point. Some significant due diligence and has been learning at an extraordinary pace, this new world that has emerged. And there's no genie back in the bottle with this shit. This isn't 2017 ICO insanity. There's extraordinary substance and meaning to these systems that are undeniable at this point. And clearly, we could have a deflation of assets, but the technology is profound. Some serious stuff that's being built that's sophisticated and complicated, and the functionality is deprecating of legacy systems. It makes the legacy systems look pathetic. Even Pickle is rallying. Good old Pickle. I think I have 300 bucks worth. Can't move any funds. LP stakes and positions. Yeah, I'm not willing to pay 50 bucks per move. 307 on the Gwei. Damn. I'm not touching anything. So, but that's the deal. So, everyone on the stream, the only thing you can do, you need to be prepared for a risk-off event. So basically the gist of that is you need to have a bunch of Ethereum liquid. So I keep a bunch of Ethereum liquid, as you see, just in case I need to throw down $300 a transaction to exit positions. But my opinion right now is I don't have many positions. I don't have any, I only have one position I'd be interested in trimming in the case of a story change, and that's my only speculative play. And that's Rook. It's because I'm over positioned. I'm overexposed. Warren Buffett often talks about you need a concentration of value in order to make gains. Every other asset I have is from yield or whatever you want to call it, dividends, it's emissions, it's stuff like that. It's all properly positioned, it's all properly sized. The only over position, extraordinarily over positioned asset I have is Rook. But let me go through the comments, and I want to get back to this chart. This is probably I'll get into it in a second. Thank you, Archie. Appreciate it. Pleasure. Yeah, Danny, welcome. Um, Ethereum price discovery, lovely. God bless. Sure as hell need of a lot of it to operate in the DeFi space. But if you're going to make $5,000, who gives a crap about a $200 Ethereum transaction? Seriously. So folks complaining about that, yeah, all right, fine. You're not going to be doing $20, putting $20 into Uniswap LP, sure, but this is part of really understanding and processing the scale and scope of what's occurring in the DeFi space. It is it's not necessarily a whales game at the moment. This is also a game right now, the Ethereum DeFi space, of the people that have been in it since 2020 when gas was 10, 20, 30 way, and these systems were just emerging, and Curve just did its first 1 million, 2 million, $5 million day, and now it's up at how many hundreds of millions of dollars a day, and Uniswap's cranking out almost $1 billion a day on average. So this is only going in one direction, boys and girls. What are your thoughts on XRP? Straight down. 2 airdrops. No interest in XRP whatsoever. Sure, fine. For me, it's a bearish setup right now. Until the story changes, the SEC lawsuit needs to be settled, and we need to see some serious institutional action as well as deployments across financial marketplaces, so clearly involving remittance. So clearly, there's a big trend with regard to its technological consumption. And that's very meaningful. So I don't discredit XRP in any way with regard to where and how it's being used currently. But what in my mind I see is there's no reason to allocate value to it. The detractors or the bearish pressures on it overwhelmingly downplay anything good about it. And this is obviously from a complete investment standpoint or value allocation standpoint. There's plenty of good things to be said about the project from a technological standpoint. You also, oh, good, God bless you, Crypto Chick, with the early shares of Tesla. Just sit on it. Listen, if you're in Tesla less than 300, gives a shit if the market crashes 60%, and the odds are I think it's going to crash some ridiculous amount because Tesla is one of the most important companies to emerge in the last 100 years. Um, and focus on that. Focus on what it is, what you own, not the price of what you own. And if you merely look 5, 10 years into the future and what they're going to become, Best. I did not have this mentality last year. I did not have. So bear in mind. So I liquidated my Tesla shares. I owned at 280. I sold them for like 580. Obviously a ridiculous profit, but the vast majority of that value, I allocated towards the crypto space, and I significantly outperformed where Tesla has gone. So in hindsight, I wish I had those Tesla shares, but in hindsight, I made the right decision. And the experience that I've had thus far in 2020, the DeFi explosion and what has emerged in 2021, and the path that is more obvious now than ever for the future with what has emerged, it was the right choice and it was the better choice. But I sure as hell do miss those shares. God damn it. Mark's in the house. Rational people. Stelios, Grizzly, GTFO from XRP. You listen, fine. Here, take a look. And the dollar is completely. There's some serious stuff going down. You see my commentary this morning on Twitter. Check it out. My goodness gracious. I mean, literally, it's sitting on the 4-hour 200 EMA. There's some nice support there. Clearly, it's oversold. But dare we pull out to the daily and the weekly? Come on, guys. I mean, literally, it's sitting under, what is that, the 50 SMA for resistance? It's sitting under it, and you see the bottom of the candle body is where it is. So it just hit the 50 SMA for resistance. Stoke just experienced, well, daily, basically, was that today? Yesterday, 2 days ago, the bearish signal cross on the daily. This thing was so overbought. This thing's going only down. And that's what's so interesting about looking at a relatively short-term time frame versus the long-term time frame. Do you realize for this bullishness to be re-engaged, it's not happening. There is no chance whatsoever in the short term that bullishness will re-engage for this because it has to get above the long-term moving averages. And at least that's my philosophy and the way I look at technical data. Sure, you're at 1,000 and change. If it rips to 2,000, it'll be 100% rip in price. I don't care. 100% rip to the upside is nothing with the scale and scope of what these platforms are going to become. 100% is nothing. Sure, if you're a trader, you could rip 100% or a leverage 10x, 1,000% gain or whatever the hell you're gambling. I don't care. For a value allocation standpoint, I tell you guys all the time, rip to the upside, retest, and the higher high. And that's how that game is done. This is extraordinarily bearish. Rarely see something that bearish. Yeah, we're going to get to the Rook Eth chart, Max. What do you think about Raul Warren? Yeah, so Raul's video Sunday night was really good. He's extremely smart, and you should take his warnings with great caution and thought. Um, I listen to Stephen Van Meter a lot and a lot of Twitter personalities. The last thing you should ever do is you don't have an emotional response. It's irrelevant. What's pertinent is the data. And clearly, you wake up today and you see the DXY breaking out. You see literally the equity indexes rallying ridiculously, like ridiculously rallying. You see Sven's rising wedges, Sven wedges, and this thing looks like it's ready to collapse any day now. So what we see here is contradictory information. We're seeing correlation, uh, bullish dollar, bullish equities, bullish crypto, and the argument that most have, the prevailing argument, is that there's an inverse correlation between dollars and everything else. As the dollar goes up, it crushes everything. Sure, I see that as likely the case from a broad macro perspective, but there's a lot of historic overtones to that sentiment, and the my speculation is that we're going to see some significant contrarian action. And I expect as the dollar rallies, it'll crush the equities market because shit, that's what it does. It's going to absolutely obliterate tech equities, and clearly, broadly, the S&P, Nasdaq, and the Dow are just going to get crushed. albeit I firmly believe there are in a crash. What is a crash? It's value. It's a value reallocation process. There's going to be significant value reallocation to assets that have yet to inflate, and this plays into the narrative that I have of the commodity supercycle, battery metal miners, metals, and clearly the crypto space. These assets have yet to inflate compared to the trillions of dollars that are in the equity space. What I find fascinating, I've been following the 2-year and the 30-year. So this has been hovering. It's clearly by support, and we'll see how that plays out. Because if this tanks, that means we're experiencing a significant risk-off event where the big money is throwing money into government bonds. Let's take a look at the 30-year because I saw that rallying earlier, and this is what has me partially perplexed, but mostly fascinated. This is such a contrarian indicator that something new is happening. Um, Yields are rallying on the 30-year bond, which means the 30-year is selling. And if this breaks resistance, I mean, it did right here. Look, broke the new higher high, retested, and held support. That's the bullish indicator I always talk about. And here's your next line of resistance. So dare it get above that, something's up. For the 30-year to be dumping and the 2-year to be holding steady at support. So I'm just trying to make sense of this myself, guys. So you watch the dollar, watch for the collapse of tech equities. You got to keep an eye on crypto, but crypto's freaking rallying, guys. This is crazy. Look at Bitcoin. It ripped this morning. I pointed out last night that inverse head and shoulders that I noticed, and it clearly broke out. And right now it's in that symmetrical triangle, wicking out of resistance. And this thing's going to break out. If it doesn't, I'd be quite surprised. It is more likely than less likely to break out. Symmetrical triangles are break direction agnostic, but tend to break in the direction of the prevailing trend, and it just ripped to the upside. So the prevailing trend is bullish. This is a bullish symmetrical triangle. Let me get some more questions. I got to hit the Rook chart, and we'll try and wrap this up. I don't want to keep you guys too long. Contrarian sentiment. I am not selling my XRP because everyone is bearish. Yeah, okay, that's okay. There's nothing wrong with it technologically, but definitely be prepared for it to significantly depreciate. I expect it to significantly depreciate from here. Bear in mind, I also know that it has probably some of the most asymmetric price appreciation potential of the entire crypto space. It has been obliterated. Its price has been destroyed. So if the SEC settlement comes through, it could go from 20 cents to $2. Just saying. So you make a good point. And these are major considerations. Would I ever apply value to that asset? No, it's not part of my philosophy, and we all have to make our own choices and decisions. There's nothing wrong with that. But this thing that it probably has some of the most asymmetric return potential of max risk, max reward of the entire crypto space. That's the bottom line. Heirloom XRP only ripped due to it was irrational exuberance. I don't even want to go back to the chart, and I want to kind of move on from the topic. It ripped because of irrational exuberance. Market participants, retail that had no idea what they're doing. And as I always say to you guys, what goes up comes straight down. What goes straight up comes straight down. So that's exactly what happened. It went straight up for no reason, and it came straight down because it went up for no reason. So it's not a healthy market, and healthy markets experience full retracement. And that's the bottom line. Derek, Bitcoin dominance is falling. I expect the DeFi space to at some point outperform even Ethereum. I expect to see Ethereum assets worth more than Ethereum. Cost basis for XRP, 22 cents. Yeah, that's pretty much the base, the bottom line. Probably where it'll fall to in the short term. Maybe it'll go down even further. But listen, it's a risk on play, and I'm sure you understand that. I'm sure you have a proper position sizing. You're not overly positioned with excessive risk, and it has some of the most incredible asymmetric return potential in the entire space. The problem is, for a person like me, the time horizon. We have no idea what the time horizon is for the SEC settlement, and so on and so forth. So it has right now a completely vague time horizon. And for me, I need a little bit more certainty in assets where I park value. So, all things considered, that is, you can be quite reasonable and still apply value to XRP if that suits your fancy. Here's the deal. Let's go. Let's look over Rook, and we're going to wrap this bad boy up today. Rook's sitting at 440. Oh yeah. So we're on the verge of this imminent supply disruption. Gas prices are absolutely exorbitant. Folks see I have an I'm extraordinarily overpositioned in the asset. 2861 blocks remaining. Let's look at the chart. So this might be one of the most bullish charts I've ever seen. So aside from the volatility during launch, which is irrelevant to me, market stabilized itself. What's pertinent here on the chart is that previous resistance flipped support. And not only did it flip support, it held support for like 2 weeks. And even more so than holding support for 2 weeks, these wicks to the downside are uh, fascinating, a spectacle to be able to see. You don't see this often. This means it the assets were liquidated heavily and they were all bought. This basically indicates an extreme cost basis restructuring and a value rotation from the early holders to new holders, where this is the current price point. This is an enormous amount of enormous quantity of Rook that was shifted from old holders to new holders, because clearly an old holder first has to sell before a new holder creates their new cost basis. So this is an extraordinary floor for price action at this point. 2 weeks, massive asset quantity rotation. And top it all off, one, two, three, four support hits on this ascending triangle formation. Clearly, we have higher lows as well as the ceiling, which was struck 3 times, 4 times on this daily chart. Top it all off, the ceiling of the symmetrical triangle lines up with a previous all-time high. Not all-time high with regard to like the first 2 minutes of trading or its launch price, but at least all-time high with regard to how this chart is drawn. In addition, we delve into the fundamentals of the project and what it does. I'll briefly elaborate for folks that are new to this. Rook and Keeper DAO are designed to extract value strategically from the Ethereum network. Various games, the 3 different games they talk about in the white paper. But opportune Ethereum mempool transactions by analyzing the mempool, looking for opportunistic front-running opportunities, so on and so forth. But that in broad strokes is the fundamentals of the project. So you could just imagine the scale of the market and the amount of value that can be extracted from it. So combine that reality with the intelligence required to create those keepers and create code the smart contracts. And what you have is a brain black hole. You have a platform that's completely dependent on the attraction of intelligence and it gives them the opportunity to extract immense value from the Ethereum network by facilitating liquidity for those types of opportunistic transactions. What you have basically is the perfect storm because intelligence attracts value. That sets the narrative on social media. Intelligence also creates value. And this platform is entirely designed to extract value from the Ethereum network. Could you imagine if this thing scales? Could you imagine if liquidity ramps to a couple of billion? And we're not talking about Uniswap liquidity. We're talking about liquidity the keepers have access to. And the Ren team just partnered with SBF. And basically, Rook is the Ren team. And SBF has billions and billions and billions of dollars of either liquidity or funds, whatever the hell they have in their treasury. The potential for this platform to scale is probably some of the most bullish fundamentals I've ever seen. So we're combining those bullish fundamentals, these probably historically bullish technicals, some of the most bullish technicals I have ever seen, with the fact that we're about to experience, whether it's a long-term or short-term supply disruption, I don't care. even if folks on what the heck's it called, Discord, are talking about extending liquidity emissions. I don't care. If you're at 100% liquidity emissions right now, whatever, the 2,500 a day, and you cut that down by 75%, that is a supply shock that makes the Bitcoin halving seem like a drop in a bucket. So to top it all off, the expectation is probably a period of time where there are no emissions at all. So yeah, we're on the verge of a massive bullish breakout of an ascending triangle with these wicks to the downside following a support flipped resistance. Probably the most bullish setup I've ever seen for an asset and a chart that I have ever seen. The Rook blocks remaining is the amount of blocks before it is expected for emissions to stop. No more Rook emissions from these liquidity miners that are getting 80, 70, these percent numbers. They will stop. No more new Rook will be added to the circulating supply. And we're expecting, obviously, a news announcement. We're expecting the Dow formation and voting. And no doubt they've been working over the last couple months. So it's an inflection point. And that's what's pertinent. And what's exciting is that inflection point is in about 8 hours. Just saying. Am I not concerned that the Ethereum breakout could wreck this chart? Did I not? I think I just went over pretty much my analysis of this chart. So interestingly enough, so what you see with the Ethereum breakout is this: Rook versus Ethereum has gone down a little bit today, but what you'll see is the price point is at 434, even though Rook per Ethereum has gone down. So the price point has gone up, bolstered by the appreciation of Ethereum itself. No, I'm not. Unless the story changes, the trend continues. That's where the emotions need to be realized to be irrelevant. They're completely irrelevant. So the fundamental story is completely on track. Fundamentals tell you where to look. Technicals tell you when to look. One, fundamentals have nothing to do. What the fundamentals of this asset have absolutely nothing to do with the Ethereum price action. And even really the price action or the chart, a breakdown from here, hitting this secondary, what appears to be support. That's not overwhelmingly a story change. A story change is really a failure in the protocol or something significant. So fundamentals tell you where to look, technicals tell you when. So clearly, if there's a breakdown and technicals indicate significantly further downside, there's reason to consider liquidation. But you also have to remember that's not the story changing. The story is irrespective of the price point of the asset. So unless there's significant change in the story, I don't have a significant inclination to make meaningful portfolio adjustments. Clearly a breakdown, and I'll have to start thinking, but that's the name of the game. So for now, listen, right now, this is the craziest chart I've ever seen. This is the craziest setup for an asset I've ever seen, fundamentals and technicals. It's comforting to hold and watch yield come in. Thanks, Noah. Heirloom, yes, yield. Charlie wants me to talk about yield, wants me to talk about curve at some point. 12:08 p.m. though, so I'm going to wrap this up in a moment. That's what Rook blocks remaining mean, Heirloom. And last but not least, Max, you talked about the ETH breakout. Yeah, I'm not worried. That's the name of the game. Later this week, what's today? Tuesday, Wednesday, I'll get back to yield. I'll talk to you guys because, a lot of this stream was started obviously in 2020. It was yield because when you do a risk on play and you make gains, you need risk off and you need yield. You need a structured portfolio that's generating revenue. And that's really all that matters because, folks, the prevailing trend is buy low, sell high. But there's no plan after that. You're going to sell for what? What the hell are you going to sell your assets for? And I know it's not a trivial reality that you have to know what you're going to do when you sell an asset. I mean, listen, folks love their Digibyte. Love my Digibyte. Love Digibyte. I think it's a breathtaking platform. Price point's irrelevant. It's been destroyed of late. I've seen a little bit of bullish uptick lately. If DigiByte goes to $1. You're going to sell it? You held an asset for all these years. You love the asset. You love the community. You love the story of the asset. And you're going to wait for it to go to $1 and you're going to sell it to get rid of it? Yeah, I looked right into the camera for that shit. There's no plan there. If that's your thought, there's no plan. Buying low, selling high, loving an asset is a contradiction. It means you need to have a plan. It means you need to focus on yield. You need to focus on proper position sizing, proper portfolio balance, and you need to understand how to make a portfolio work for you and position yourself in front of the market. Protect your gains and find your you have to find what works for you. That's the most important thing. And the best thing I could do with this channel is to tell you my thoughts and my ideas and encourage the evolution of everyone's own personal story. Um, let's wrap it up. Crypto chick, smack those likes. We got 30 people in the stream, 18 with them thumbs. Hit them thumbs. Archie, never selling DGB, can't argue. Charlie, we're not XRPing. My brother, it's a complicated sentiment with regard to that particular asset. But let's wrap it up. 12:10 p.m. on Tuesday, February 2nd. Thank you all for joining. I hope I help. We will have this stream tomorrow, Thursday, Friday, every damn weekday, because that's the way we do things around these parts, because the time is now to make a difference in our understanding of macroeconomics, how the crypto space fits into it, what the heck is a crash, and what the heck is a real risk-off event, and how things are going to likely play out over the coming years. So smack those thumbs up buttons, tell everyone to subscribe, and I will see you tomorrow. Peace.